Nevada's housing market isn't just risky, it's sitting on a ticking time bomb set to detonate in 2026. Prices may look stable on the surface, but underneath, powerful forces are lining up in a way we haven't seen since before the 2008 crash. And here's the number that should scare every homeowner: a potential 30 to 40% wipeout in values if these dominoes fall together. What makes it even more dangerous is the timing. 2026 isn't just another year on the calendar. It's the convergence point where water shortages, insurance costs, tourism slowdowns, short-term rental crackdowns, job pressures, and financing resets all collide. This isn't fear-mongering, it's a countdown. And if you know the signals to watch, you'll see the cracks before they hit the headlines. It all begins with Nevada's most fragile lifeline: water. Imagine waking up to a headline that says, "Nevada's main water supply is running dry." That isn't a sci-fi story, it's Lake Mead's reality. Federal projections confirm shortages through 2026, with water levels hovering near thresholds that trigger mandatory cuts. If those cuts happen, Nevada is one of the first states to bleed. But here's the chilling twist: the rules that decide who gets water after 2026 haven't even been written. That means every buyer, builder, and investor is making decisions in the dark. And when the most basic element of life is in question, confidence collapses. Think about it. Would you pay $500,000 for a Las Vegas home if you weren't sure the taps would still run in 10 years? Water uncertainty doesn't just nudge prices lower, it can knock them off a cliff. And just when water creates long-term doubt, another silent crisis is already squeezing homeowners in the present: the insurance squeeze. Picture this. You've paid your mortgage for years, only to get a letter saying your home insurance is canceled. Thousands of Nevada families are already facing that reality. Insurers, spooked by wildfire risk and rising claims, are hiking premiums or refusing renewals altogether. For homeowners, that means bills jumping by hundreds of dollars a month. For buyers, it means some mortgages simply can't close, because no insurance equals no loan. This isn't just theory, it's exactly how markets in Florida and California spiraled into crisis. The danger is that it happens quietly. Insurance hikes don't make flashy headlines, but they crush affordability in real time. And when deals fall apart at the closing table, sellers slash prices to survive. And while insurance quietly chips away at household budgets, Nevada's biggest engine, the one that props up everything else, is already showing cracks. Tourism and gaming slowdown. Las Vegas lives on one thing: people spending money they don't really need to spend. But visitor numbers are already slipping, even as casinos post record wins. That's the illusion of a late-cycle economy: fewer people spending more per head. It works, until they stop. Behind the neon lights, conventions are still lagging below pre-2019 levels. Sports betting, once hyped as Nevada's savior, has lost ground to online platforms. And resorts like MGM are cutting jobs through automation. Every casino job lost doesn't just affect one worker. It ripples across entire households, mortgages, and neighborhoods. Tourism isn't just entertainment in Nevada. It's the backbone of the housing market. When visitors vanish, jobs evaporate, and homeowners fall behind. And just as incomes weaken, another wave is forming, this time from the flood of homes tied to short-term rentals. The short-term rental crackdown. Airbnb once looked like free money in Nevada. Investors rushed in, scooping up thousands of homes to rent out on weekends and during conventions. But now that dream is turning into a nightmare. Clark County has begun enforcing strict rules that will wipe out most short-term rentals by 2026. Thousands of properties will either be forced into the long-term rental market or dumped for sale. Here's why that's dangerous. These homes were never priced for local incomes. They were priced for tourists. Without weekend profits to cover the mortgage, many owners can't make the math work. Imagine 5,000 or 10,000 new listings hitting the market at once. Not from willing sellers, but from desperate ones. That kind of sudden supply doesn't lower prices gently, it smashes them. And it's not just small investors who are panicking. Big firms that own large rental portfolios are already quietly selling off Nevada properties before the rules bite. If the professionals are racing for the exit, what does that tell you about what's coming for everyday homeowners? And the danger grows, because this surge of inventory is colliding with a job market and affordability picture that's already stretched to the breaking point. Jobs and affordability math. Nevada's job market looks fine until you zoom in. Official unemployment sits in the mid-5% range, but that number hides the real story. Hospitality and retail jobs are the first to vanish when tourism slows, and automation is already replacing thousands more. Self-checkout kiosks, robotics in warehouses, and cost-cutting in casinos mean steady paychecks are anything but guaranteed. Now combine shaky incomes with brutal housing math. Reno's median home still hovers around the mid-$500,000. In Las Vegas, prices remain close to record highs. At today's interest rates, a typical buyer needs a six-figure household income just to qualify, and only a small slice of Nevada families reach that threshold. For everyone else, the monthly payments are crushing. Jobs are fragile, affordability is already broken, and sellers only hold out until reality forces them to cut. And that's the setup heading straight into the year where every domino falls at once. The 2026 convergence year. All of these pressures, water, insurance, tourism, short-term rentals, and affordability, are dangerous on their own. But in 2026, they converge into a single storm. That's why this year is different from every dip Nevada has seen before. Here's the lineup. First, the Colorado River agreements expire, and new rules for water use must be set. No investor wants to gamble millions while policymakers argue over who gets the last drop. Second, thousands of adjustable-rate mortgages written during the ultra-low-rate years of 2020 to 2021 reset in 2026, forcing families into payments hundreds of dollars higher each month. Many won't be able to handle the shock. Third, Clark County's crackdown on short-term rentals kicks in fully, adding a wave of unwanted inventory to the market at exactly the wrong time. And then comes the economy itself. Tourism growth is already soft, automation is eating jobs, and buyers are stretched thin. If even one of those pillars collapses, the market bends. But if they all hit in the same year, the result isn't a correction, it's a crash. That's why 2026 isn't just another dip in the cycle. It's the year Nevada's housing market faces a perfect storm of higher costs, weaker incomes, and vanishing demand. And when those dominoes fall together, the question isn't if prices drop, but how far. So what does all of this mean? Nevada's housing market isn't just drifting toward a slowdown, it's racing toward a 2026 breaking point. Water uncertainty, rising insurance costs, tourism slipping, short-term rentals collapsing, fragile jobs, and affordability stretched to the max. Each one of these could shake prices. But together, they form a storm powerful enough to cut home values by 30 to 40%. The signs are already here, just beneath the surface. The question is whether you'll recognize them before the headlines do. For homeowners, this may be the last window to sell while prices still look strong. For buyers, patience could deliver once-in-a-generation deals, but only for those ready with cash, because credit will tighten when fear sets in. 2026 is coming fast, and the clock is ticking. The only real question left is simple. Will you be prepared when Nevada's housing bubble finally bursts? If you want to stay ahead of the crash and keep getting updates no one else is talking about, make sure to subscribe and turn on notifications. That way, you'll know the truth before the rest of the market does.